If this is where you discovered the market had topped, you're already too late. Most traders don't lose money at the top. They lose money by holding too long at the top. In a minute, I'll show you the exact three-step early warning process I use before any major top. That's roughly a 63% drop. Now, here's the part that most traders never calculate. To go from $17 and some change back up to $46, you need approximately a 171% gain. And this was only a 60% drop. In a few minutes, I'm going to show you what would happen when the drop is greater than 80%. You are not predicting the tops. You're actually protecting your profits, protecting your capital, and protecting your wealth. Okay, before we go on to the next signal and work through what a top looks like, remember, topping is a process. Unlike bottoms that tend to be more event driven, bottoms tend to happen fast, fierce spikes, selling climaxes, sharp reversals. Tops form slowly. They roll over, they warn you if you know what you're looking for. And here's the key. I'm using the exact same tools, clues, and cues that I used on market bottoms, but kind of in reverse order. And that's how you keep it clear, simple, and repeatable. This is the foundation of the AutoPilot trading system. The same structured framework we use inside the AutoPilot trading service every week. You don't need to call the top. You need the three-step early warning process, three levels, evidence-based, so you can stay calm, cool, and collected. Have you ever given back gains because you thought prices would actually push higher and it turned out to be a top? Starting with our first clue, it's momentum. Basically, our TSI, True Strength Index, that we use down here is already starting to turn over, but there's some other important things you want to notice. Well, check it out. We're basically making a new high across here, as you can see from here, a new high. However, what's the TSI doing? It's actually not making new highs. So that's one of my first clues that I look for, and that is negative divergence on the TSI. See how the momentum is not making higher highs? And check this out also. We spike up twice there. And the other thing that I spoke about in that tops tend to be processes. Well, look at that. We do this nice rounding top, and then away it goes and it falls. The first thing to remember is one, this is not the selling signal. The top is not the selling signal. It's a yellow light, which means it's time to start tightening stops or making sure your stops are firmly in place. Sometimes the price doesn't even make a new high, but it just comes close to it. Now, in this case, not quite a new high. However, my divergence is still in place. Sometimes the price action doesn't make a new high. It just gets back barely to the old high. But momentum is already weakening, and that's what you call divergence. Remember, amateurs look for certainty, professionals look for warnings and take action to protect their gains. This is our first warning. Now, hang in there with me because I'm going to show you exactly what this looked like on TQQQ a little bit earlier in the year and what it means in real dollars and or percentages going forward. The next clue has to do with the structure compression. And what that means is basically, what are the moving averages doing? On the daily chart, as you see here, it was 124 days from the time this top started forming until it finally broke down over here 121 days later and broke and dropped down. I'm using the same moving averages that I use to predict the bottoms, the golden one is the 50-day moving average. This kind of reddish one is the 20-day EMA, and the blue one is my fast acting 8-day moving average. As you can see what happens, let me pull this up just a bit. What happens, and I call this the jackhammer effect. Prices start falling, as we see here. We come down, we're all running nicely. The moving averages are separated. It looks like it's going to move higher. Then it comes down and bam, right off of the 50-day moving average. And then it comes down and hits it again. And notice what the moving averages are doing. The shorter terms are actually falling already. The longer term 50 is being hammered down, and I call that the jackhammer effect. Be watching for the jackhammer effect to knock things down along with the negative divergence on the TSI, which is evident even here on the daily chart. Check this out. Made the new high there. However, when we get over to the high here, you have a negative divergence also going on the daily charts. And so we always want to take a look to the left type of understanding to find out, is the price action divergence momentum wise? And in this case, the answer is yes. Stay with me, because when we get to the next aspect is when structure is broken. I'll show you how the trend lines come in and the support lines come in, and that's coming right around the corner here. So, tell you the truth, I used to ignore these signals and tell myself it would push higher. That mindset cost me a lot of dinero, if you know what I'm talking about. And this is where most traders think the trend is still healthy, but in fact, we're getting clues that the trend is getting weaker. I'll show you why in the next step. Let's go. I'm going to highlight two areas where structure is broken on this. As you can see, if I grab my trend line here, and I'm just going to draw a slight trend line, I crossed here like this. And as soon as this trend line is broken right there, that is when I want to be going, hey, I'm out of here. However, there is another trend that we want to be aware of, and that's the breaking of horizontal trends. I'll just draw that in there like that. Get that close, pretty close to zero. And warning number, this is basically action step or trigger number one to be out of this. And here's the number two. As soon as you break that trend line, it's telling you that, hey, I'm heading down. I want to be out of this. Now, there were earlier clues on this daily chart. When the 8 and the 20 cross below the 50, but notice it corresponds with that candlestick right there. How does this look on the weekly chart? Click back over, and there you go. We have our trend line going up. And on the weekly chart, there were some additional warning signs that I'll just tell you about. And the additional warning signs were the huge bearish reversal signal, which corresponded with this bearish reversal signal. And if you understand candlesticks, which I'm not going to get into here, I have other videos that talk about that. This bearish engulfing here, when we first put in the highest top, was still in effect when we put that one in. And that was about 8 or 9 weeks prior to. Again, we told you this particular top to finally break down took about 120 plus days. So on the weekly chart, I've got a couple of things I can be looking at. That week, I closed below the trend line. And it happens to be that is right at the horizontal support. So that would have been a good time if you're trading off the weekly charts to go ahead and exit the trade right there. And the other thing is that we broke below the 50. Again, this is the representative of the 50 on the weekly chart. Broke below that. I think that exiting this one would have been best off of the daily chart. Okay, as I promised, let's take another look at something that happened with TQQ several months prior. I think you'll really be surprised. And this will be a real eye-opener to you. So don't go away. I'm jumping over there right now. Okay, back in 2021, we have another major top that takes place. Notice, doesn't look exactly like the top that took place in 2024. We've already highlighted, but what are some of the features of it that you can walk away with and go, okay, one, in the process, makes a high right there. There's the high on the TSI that went with that. Makes a new high here. What's the TSI doing? Negative divergence. And then I tell you that once you get used to looking for negative divergence, you're going to go, I can't live without it. No, I don't know if you'll say that or not, but it is really a game changer for understanding where the price action may go. The situation on this one is this. I had a bearish reversal on the weekly chart. That is one clue, two clues, and what is the moving averages doing? There's that jackhammer effect banging down on that 50-day moving average where it goes from heading up to going sideways. Well, what about the structure break, which is also very important? Let's go ahead and just grab let me draw a line across here. And I just grab there we go. There's the trend line. And as we said earlier, if that trend breaks, stand by. So you tell me, do you see where you had gotten out of this the first time? Or do you see where you would have gotten out of it the second? There's the clues. You let me know if you see those. One of the other things we want to take a look at really quick is that notice the TSI at that high right there. It rolls over and it stays cross to the downside all the way down to here until it crosses back up. However, it doesn't stay above the 50-day moving average and continues to fall. The shocking thing about this particular fall is that it took almost a year to get from here to here. Just drawing in the line there. That fell to those lows right there, 398 days, so a little bit over a year. How much of a fall was it? As you can see, 87%. How long did it take to recover from that? It took over 2 years to recover from that fall. But the more astounding thing is how much did it cost you? Okay. If you rode that all the way to the bottom, well, that's one heck of a drop. It dropped all the way from $43 and 50 cents up here down to $8.81 down here. That fall was 87%. You want to take a guess on how much was required to make up for that 87% fall? Because it was actually 649% to get all the way back up to this past high. How long did it take? It took almost 2 years or maybe a little bit over 2 years to make that back. And if for anybody who's a buy and hold kind of guy, that is so painful. Okay, a couple of things to remember is one, you don't have to catch the top. And matter of fact, it's a fool's errand to even try to catch the top. However, you need to know when to start protecting your gains, and your profits should be number one in your list anyway. That's where you start. That's where I start my trade is how much am I willing to lose on this? Capital protection is what allows compounding to work. If you missed the first two videos in this series, where I break down the tools, the clues, and the cues that you utilize to identify both bottoms and tops, and the video that is actually on bottoms, with the current market conditions, you may want to take a look at that for sure. I put the link down in the description. And remember, if you don't want to manage this type of thing alone, this is exactly why I designed the AutoPilot trading service. We walk through using the early warning system every week, either at the lows or at the highs, to prepare ourselves for either taking our profits or getting into particular trades. So I'll put a link down in the description because I think maybe you would be perfect as an autopilot trader.